Well, hello, and welcome to another episode of the podcast that I have investing in the USA. And with us today are John and Sharon. Actually, I see just John in the name tag, but we also have Sharon, as you can see, Kucewiczs. And both of them are the experts, the people that you go to if you want to know about mobile home parks. So please introduce yourselves, guys.
Well, good morning and good afternoon, that is, depending on where people are, right? I am John Kucewicz,
And I'm Sharon Kucewicz.
and together we are Panorama Fund LLC.
Perfect. Perfect. That's excellent. So, you know what? Let me just get right into it because we have a lot of questions, and I know people want to know these questions as well because I wanted to know these questions, and I think we actually spoke about them. Um, Let me ask you guys, why do you think mobile home parks are the asset class that they are? How are they different to multifamily, for example? Because I know I have met a lot of people that have invested in mobile home parks, not in mobile home parks. I mean, in multifamily deals, but they haven't actually gone to mobile home parks. Sometimes because they're not available, but sometimes it's because they don't know. So why do you think the big difference is?
Well, first of all, a mobile home has its own four walls, roof, and floor. They're not attached like you'll have common walls in multifamily. So there's a different living experience for the residents in a mobile home park. They each have their own backyard. They might each have their own shed or place. And to a large degree, a mobile home park is really a parking lot for a manufactured home. We interchange the name manufactured home, mobile home. Some people call them trailers because they used to be in the day pulled behind somebody's Suburban or their vehicle, and it was at one time kind of a luxury status. So the other differences are, and Sharon's found this out, and normally talks about it in our presentations. The um, uh, the cost for expenses is generally 10% or more higher in a multifamily, let's say an apartment building or an apartment complex, than it is for a mobile home park, as long as that mobile home park is not what we would call a heavy lift. Because to be truthful, there are some mobile home parks that we've taken on that are heavy lifts, and then those expense ratios approach the apartment buildings or the multifamily. There are other aspects as well, and Sharon talks about this a lot. Like, Sharon, I'm going to ask you, how easy is it for someone to leave a mobile home, particularly if they own a mobile home in a mobile home park versus somebody who's in a multifamily? What's the difference between
Right.
people leaving?
So, in a mobile home park, the turnover is much less because it's hard to move a house. You know when somebody is leaving because they have to put the wheels, they have to jack the house up, they have to put the wheels back on it, and have to have a special truck. And it usually costs between ten and $20,000 to move a mobile home out of a mobile home park. So they can't just pack up in the middle of the night like they can in an apartment or even a single family home. So the turnover is much less than with an apartment. The other thing too is we try to, in a mobile home park, like John was saying, it is a parking lot. So we really just own the dirt and we're renting out the dirt to the individual who owns the mobile home. So there's two things about a mobile home park. There's things called tenant-owned homes, and then there's park-owned homes. So our buy box is really to find parks with as many tenant-owned homes as possible, because the risk is the cost is much less to maintain that particular home, where the tenant is maintaining the home. Where if the park owns the home and rents them out, their expenses are higher. They take on more risk. There's more things to fix up. So generally, if we have a park with park-owned homes, we try to convert them to tenant-owned homes as fast as possible, so that we're really only getting the lot rents
Right.
for.
I remember you talked about this with me at some point, and you said that too, because you said that when you have a park on home, that's just basically more similar to an apartment in an apartment
Yes.
complex. Whereas
Yeah.
if you have a tenant on home, of course, now they have to pay for their own taxes and for their own insurance. And that here in Texas, at least, is the biggest or some of the biggest ticket items that you have in any kind of expense when you're talking about commercial property.
Right. So our expenses, so in a mobile home park, if we're billing back water and sewer to the tenant, expenses are about 30% of the income.
For a really well-run park.
And
Sure.
then if we're paying for water and sewer, it's about 40%. Whereas an apartment building, it can be 60 to 70% of their income. So there's a lot more things that they have to manage in a multifamily apartment versus a mobile home. The other thing too is there's an increasing demand for mobile home parks or mobile homes actually, because they are generally much less than a home is. So the average person right now can't really afford a single family home when their income is $2,000 a month. What can they afford? They can afford $650 to $700 a month. And sometimes that doesn't even pay for a two-bedroom apartment in today's economy. So more and more people are looking at living in mobile home parks.
Yeah, and what Sharon touched upon, Luis, is that very few mobile home parks are being built, brand new ones in the United States. There are some.
Why is that, John? Why is that?
Well, because in general, municipalities have come to have mobile home parks in disfavor because they don't get as much tax revenue typically per person as they would from a multifamily apartment building or from a single family home or other types of use of land. Our land value is what has only business value, very little land value. When we go to appraise a mobile home park, very similar to multifamily, we're looking at the NOI. And one of the things that contributes to that higher percentage of NOI is the taxes burden on us are generally lower.
Yeah. Yeah.
Yeah. So
I understand. I understand.
and that,
Let
now
me let,
yeah, go ahead.
no, I was gonna ask you because I wanna shift gears. But before I do that, I wanted to ask you this. What do you think the biggest myth, and just make it like a sentence or something short that I would then we can use later to clip or whatever, right? So what do you think is the biggest myth about mobile home parks?
I would say that from someone who hasn't been an investor in mobile home parks, they see them as low cost places to live, low cost boxes that generally get twisted up in tornadoes, and that very ne'er-do-well individuals live in them. And there used to be a term called trailer trash. That's what they just broad brushed. Some parks have problems if they're not well run by an asset manager, by a company who doesn't care what people do in the park. Then yes, that they will be degraded. But what they don't know about mobile home parks from an investor standpoint is, to kind of quote, paraphrase Warren Buffett from years ago. He said that a mobile home is a little box that spits out cash. So
I
that
love
caught
it.
our attention.
I love it. But I think in that regard, we better stay quiet and shh, don't tell anybody. So, all right. So let me go to the next section. So, what do you think are the risks? Because some people they have fears, and these fears come out of not knowing, right? Like ignorance, right? And good ignorance. Like I was like that when I met you guys. I didn't know anything about mobile home parks. Now I do a little. I do know a little bit more. I would say. But a lot of people that I know, they still think that they are just as you said boxes to be flown away by the next tornado, right? And they're not like that at all. So let me ask you this: what do you think are the risks, like more specific to mobile home parks, or that affect mobile home parks than all the other asset classes?
Okay, Sharon, you want to try that first, or do you want me to go first?
You can go first.
Okay. Uh, all right. So the big one that affects mobile home parks is that they're hardly building anymore. So it's a constrained supply, and we love that. And with a higher demand, we can increase the rents at a higher percentage rates than multifamily can do typically. Um, where you see multifamily being built, which that's a lot of it over the past years. You look, here's another multifamily building up here, over there. Um, there are a lot of them. It's just like a lot of storage units are being built. A lot of different things are being built, but not mobile home parks. So that's a good thing for us. The bad thing is a lot of municipalities have a dim view of them, and it takes a while for a mobile home park owner to convince the municipality that we're here as the new owner to clean the park up in a whole lot of ways. Fixing roads, fixing fences, getting the bad apples out, and where we actually want to meet the police and let them know that we want to work with them to change the culture if the culture is not so good in a park. Now, what we have truly found is that the people who live in mobile homes are, for the most part, the salt of the earth. These are hardworking people. They might be a manager of a McDonald's or work there. Maybe it's a couple who works in the service industry, several blocks away from where the mobile home park is. Um, Generally, they're going to take care of their yards because that's part of our park rules. Sharon and I enforce park rules in each of our parks. So it is work, but we see our job is kind of threefold. One, we're there to make money for us and our investors, but we're also there to improve the park. One of the parks that we bought about 16 or 18 months ago, there was no playground for the kids. So we took some money, we put a playground in for the kids. And for the adults, for their parents, we also have some tables, some seats, and some barbecue grills that are there. So it can feel more like of a community rather than kids just playing in the street. So each owner of a park, um, might have a different vision, uh, but certainly we feel good that we provide truly affordable housing. And what we can do is to look at parks all over the country in landlord-friendly states where the laws are landlord-friendly. So it gives us the ability to go out even in some semi-rural areas where people love living there. Some people don't like living in a big city where most of multifamily housing is located. And the option for them is going to be a mobile home park. Now, there are cases where it might be possible for pads, that's what we call the spots or the lots where homes are put in, to expand them. And that'll depend upon how you work with your municipality and therein provide more affordability
Yeah.
for individuals. So it solves a problem that right now isn't being solved very well, And a lot of people have to double up if they're going to be in a two-bedroom apartment. Maybe they have to share with a roommate or somebody that they don't know. In a mobile home, it's surprisingly affordable, and we've run those numbers. And a young couple who's making minimum wage, well, not minimum wage, but typical
like $15
$15 an hour a piece, that they can afford to live in most of our mobile home parks.
Yeah.
So that's what we find. And then the cap rates can be wonderfully high. That's not been the case for a lot of times for multifamily, unless you're really getting into a C-class property that really needs a lot of work and the area might not be so great.
Then you have all the risks, of course, associated with that.
Yes,
Yeah.
yes. So, I mean, we do have risks also. There are risks.
And good that you're talking about that, because I was going to ask you, I know one of the biggest risks, and that's why you don't even have it in your buy box, but one of the biggest risks is when you don't have utilities from the city, right? Like water and sewer and stuff like that. If you have wells or septic tanks and all that, can you speak more about that? Like, because that would be one of the biggest risks that you would get into if you bought a mobile home park with those characteristics, right?
Right.
Yes, and I can tell you that Sharon doesn't want to look at any parks anymore that have their own water supply and septic and drain fields. She doesn't want to do that.
Exactly.
We did own some, and you become regulated by the different state entities, right? You have to have your water tested because you're a municipal small water supply, community water supply. And then you also have to have discharge permits for a certain number of gallons per day that go into the septic system. And since they're mechanical, they can fail. So it adds an additional potential risk of
money wise.
Yeah, that it adds that extra 10% of cost, and sometimes it's even more than that. So they can a drain field can fail. So if it does, you have to be prepared to have enough land to add
money.
enough land and money to add a new drain field, a new a source of money and space to drill a new water well or two. And normally you have to have a backup water well depending on the size of your property. So it adds an additional complication. We bought a mobile home park in a part of Michigan where some of the aquifers actually had mineral constituents that had arsenic in it.
Oh.
And so we were not able to use those particular wells for water, safe water. Sometimes the minerals that are in water have to be treated in special ways so that people's taste and smell is of that that is not something that is they're uncomfortable with. So there are all these different complexities of, I'll call it hydrogeobiological issues with running your own systems.
Right. Right. No, I like that because you become the utility company now, and then you have to, and you're not really a utility company. You're actually a real estate investor. That's where you're supposed to be, right?
Right. Right. So, we really look for city water, city sewer, mobile home parks. We generally do not go for the septic and the well water anymore.
Yeah. Now that being said, there's a lot of competition for them. And so does it make sense sometimes to look at something that might have its own water supply?
I like that.
But have city sewer, right? Yeah. I mean, I'll still look at if there's a brand new system and I've got investors that say, hey, sure, we're getting it at a 12 cap. Let's do it. So
he'll do it.
Yeah, he'll do it. Not you, Sharon. So let me ask you something else again. Like a little, kind of nugget or something. So for a deal, if we're talking about a mobile home park again, of course, if we're talking about a deal that you already have, that you already own, what would be 3 things that would have to go so wrong that a deal would fail?
Okay. Do you want to try that one or you want me to start?
Well, let me try a little bit.
Okay.
First of all, in our analysis, we always look at, the current income situation, and then we take a look at if we lost 30% of the tenants in the park, for something happened
Yeah.
that we lost 30%, we could still pay our bills.
That's what we
Okay.
look for.
So we
Okay.
always add some kind of cushion in there to make sure that we can still maintain. In fact, we had to do that in one of our parks. It's actually running at a 17% occupancy, and we're able to still
Stay afloat.
17,
stay afloat.
only 17% occupied.
Yeah, and we're still giving our investor who's in that deal a little bit of money each quarter.
He's making 10%
Right.
annualized still on his
Right.
money.
That is
So we
insane.
really stress our financials to make sure that we can maintain the park and pay our bills. Yeah.
So the point that Sharon was, what she was talking about, the 17%er, well, what happened there and what
It's a
failed
septic
was
system.
the septic system.
See?
It failed, and we
So
were,
that was what we learned, not
yes.
to do that
So
anymore.
So
But
that
even if they fail, I mean, you still have, you only need like 17% of the people actually paying to
yes,
break even. That's
Yeah.
unheard of.
yeah, it was a park that had 24 lots, and
Now we have 4.
now we have 4 because the
Look at
state
that.
said your septic tank and tiny drain field now can only handle 4. So you have to move out 20 homes. That's what happened to us during COVID.
Oh,
During
Yeah,
COVID,
that was a hard lesson to learn.
and we did not know at the time that some previous owner of the park had tied in the septic system to the county storm drain system. Yeah. And we didn't learn that until 4 or 5 years into owning the park. We had no idea that they'd
but
done
you see, that's a great conversation if we're talking about mobile home parks and we're talking about this mobile home park or whichever. If we're talking to somebody that wants to invest, they can know for sure that these things will never happen to them.
That's right.
Because I mean they
Never
happened to
again.
you already, and now you know what to look for to avoid those things. So even so, I mean, even if you have the worst nightmare in septic tanks and they're actually like draining the water into the rain system, and you still have restrictions from the county saying that you can only have like 4 people there instead of 24, you still make money. That is just unheard of. I mean, like, which business can you say the same thing about?
Yes. Yeah. So
Now, we lost a lot of sleep about that for a long time.
Of course.
So we figured it out. But our thing was, we're going to go long and figure this out before we allow it to go bad.
Yeah.
That's beautiful.
So the other thing that we really look at is the infrastructure. So and the land itself. We look at the trees, because trees can be very expensive. We look at, whether the roads are in good condition, and if they're paved, that's what we like more than gravel, or, unless all the other parks in the area are gravel and it's not a big issue. So we look for paved parks, paved roads, and then, when we go in to do our due diligence, we look at the sewer lines, if they are made of certain material, then we have them scoped to make sure that they're functioning properly. And if they're not, then we get some people that give us estimates on replacement, and then that's a negotiating tool we can use.
Yeah, because we do own the infrastructure in the ground. We own the water lines, we own the sewer lines to wherever they connect to the city systems in the event that we have city water and city sewer. If they fail, or if people throw stuff down in the toilets and they're not supposed to, and that does happen. So you have those infrastructure issues. Now, Sharon mentioned trees. while trees are beautiful and they can give shade and coolness in the summertime, they can also get diseases and begin to die and create really serious health welfare issues where they could break, they could fall on people's cars, on their houses, or on themselves. We had to spend no less than $80,000 in a modest sized park that we bought to remove trees that were dying from what's called an ash tree borer disease. So you have to know something about trees to see, okay, are they a problem? Can somebody get hurt from them and be ready for that as an issue? Now the other things that can go wrong, because you'd asked for three. So we talked about the septic systems, right, and the infrastructure issues. We talked about trees that aren't necessarily your friend. And the other is weather and flooding. Now, the surprise about mobile homes in flood areas is that they sit up 2 to 3 feet high, generally, above the surface of the ground. And it's not uncommon in certain places where parks are not far from river systems, where there might be standing water that's 6 inches or so in the park, but the homes are not flooded. And when that water recedes, people get back in. If you have a multifamily or single family home that is in an area where there's 6 inches of water, well, it's going to flood your home. It might not be as bad as, let's say, some of the floods that people have seen in Houston or other parts of the country. But weather, you do have to watch out for it. So your insurance, you have to have the proper kind of insurance, let's say for tornadoes. And then if you ideally you have more tenant-owned homes than you have park-owned homes, and hopefully the people have the insurance to cover damage to their home, because if a lot of homes get damaged in a weather event, we'll call it, well, then we need to do something to bring new homes in, and that's an expense. So we have to be capitalized to be able to bring in new homes at a particular rate. And so we factor that in. We look at all the weather forecasts, what's the history of tornadoes in the area or flooding. So these are not uncommon to multifamily to research as well. But for mobile home parks, that's important. Now, earlier we talked about, just the boxes that sit there. They're anchored into the ground. That's a
Right.
requirement that they have
They're
to.
not going to float away, of course. Yeah.
Yeah, yeah.
Yeah.
But they're still a little bit more susceptible to
Sure.
hurricanes and tornadoes. So we try to avoid those areas in buying them if we can.
Yeah.
So those, I think that's three. So hopefully that
Cool.
addresses some
No,
of
that
your.
was a very, very good answer. I mean, I was amused actually by that answer because I wasn't expecting that. But let me shift gears again because we're actually getting into the final part of this interview, and I really thank you for being here. But before we say goodbye, I wanted to ask you guys, where do you see mobile home parks in 5, 10 years
Okay.
as an
Um,
investment vehicle?
I would say that first of all, construction gets better and they almost become luxury, affordable places for people to live. They make them now with granite countertops,
Oh, yeah.
stainless steel appliances, really nice flooring, and they are a place where people who retire can live in a nice place, or families starting out. So I think the demand is going to be consistent. And from what we know, Luis, there's still a considerable gap between market rate and where many mom and pops have placed their rents. So there's a lot of rent growth. Again, it depends where these parks are located. Whether or not municipalities will need to designate more areas to build more mobile home parks is there's a big debate about that, because the country knows that affordable housing is important. Now, that might create a little bit of competition for us, but we'll let somebody else build it and then we'll buy it after they get to a point where they want to sell it. When it's already done.
I think that's also part of the buy box that you guys have, right?
Yes,
Right.
yes. I think they're going to be here for a long time, simply because of the affordability. They're unmatched as far as having your own four walls and roof and place to live.
Yeah, yeah. Let me ask you one final question for Sharon. You can actually finish this sentence. The investors who win in mobile home park understand. What do they understand?
What do they understand?
Yeah.
They can understand that it's a very stable asset class, that there's always a need for affordable housing, and that as our expenses or our inflation rate goes up, there's still going to be, when there's a recession, it's the most affordable place to live. And our returns, because there's still considerable room to raise rents in the mobile home park space, that's where we can really add value to the park and give our investors some really good returns.
As a for instance, and I don't know that we can do this nowadays, but we're certainly aiming toward it. We had gone full cycle on 3 parks a number of years ago, and the average return of those 3 parks to our investors was 30% annualized. Each and every year, when you average it out from the combination of the cash on cash and the profit at sale. Now, to find deals like that, we have to be patient and we have to find deals where we're solving problems for the owners. So they're out there, but you have to look. And ideally, we're a little bit smarter than the other people who are looking, although there are some people who are our mentors. We have mentors that own thousands and thousands of lots of mobile homes. So we learn from them as well. So that's, I guess.
Who we are.
Yeah.
Perfect. No, I love it. I love it. And again, we just got to the finish line, and I want to thank you guys for being here. I definitely enjoyed it, even though I knew some of the answers. Some of them I didn't, and they still surprised me. So now more than ever, I definitely want to invest more in mobile home parks. Again, thank you. I don't know if you want to have any, parting words.
Well, I know that for me, I am very lucky and blessed to be married to Sharon because she is amazing when it comes to operations. She has a background in nursing. I have a background in geology. I speak better to rocks than Sharon speaks better to people. And in a parting word, I guess Sharon has a nickname when it comes to mobile home park operations. She's called the Velvet Hammer. When she needs to be tough with a tenant, as she can be. Yes.
So I guess
any words from you, Sharon?
It's an asset class that can be easily managed, and as long as you have the right people in place, the mobile home parks can really operate very efficiently. And as John was saying, we usually find parks that we have to solve problems, and that always is the thing that allows us to increase the value of the park and give really good returns to our investors. So it's a great place for investment, and I hope that people who are listening to this podcast will take a closer look at the mobile home park space for investment, because it is a great asset class.
Thank you again, guys, for being here. And actually, I'm going to say, don't listen to Sharon, don't invest, because I want to take it all. Anyway, thank you for being here. Of course, I'm kidding. This is definitely a good class. That's why I'm doing this with them. And see you in the next one.
Okay.
Thank you so much.
All right. Take care.